You're listening to Indications by the Conference Board.
Hello and welcome everyone to this episode of Indications. I'm Denise Dahlhoff, Senior Researcher for Consumer Research at the Conference Board, and I'm here today with Dana Peterson, the Conference Board's Chief Economist and the leader of the Economies Strategy and Finance Center. On our podcast today, we'll talk about trends in consumer confidence and spending around the world in Q1 of 2021, and we'll also take a closer look at US consumers and what we can expect for the near future. Much of what we'll be talking about today will be based on the Conference Board Global Consumer Confidence Survey. And that is a survey that polls more than 32,000 online consumers in 65 consumer markets throughout Asia Pacific, Europe, Latin America, the Middle East and Africa, and North America. The Q1 survey was fielded in February. And this is an online survey, and the sample is actually weighted to be representative of the online population in each country. And so, Dana, let me ask first, what did we learn about global consumer confidence in the first quarter of this year?
Well, Denise, it's great to be here. The Conference Board's Global Consumer Confidence Index improved from 98 in the final quarter of 2020 to 108 in the first quarter of 2021. And indeed, a reading above 100 is considered to be positive. So we moved from negative to positive from one quarter to the next. That first quarter level exceeds the pre-pandemic reading of 106 and was the highest level since the survey began in 2005. According to the survey, 49 of 65 markets, or 75%, saw a rise in confidence. Global spending intentions slipped from negative, which was minus 7% in 2020 Q4, to positive, or plus 8% in 2021 Q1. And this was led by strong confidence in Asia Pacific and North America. Spending intentions in Europe and Latin America were less negative also, we saw.
Well, that sounds pretty positive all around. What were some of the reasons for why consumers were so optimistic?
Well, there are a few reasons. Global consumer confidence achieved new heights in 2021 in that first quarter, and that's because vaccination campaigns broadened, restrictions on mobility began to lift, and also governments and central banks continued to provide fiscal and monetary policy accommodation. Importantly, our survey revealed that global consumer confidence was propelled by stronger sentiment around personal finances, as well as sentiment about jobs prospects.
I know you and your team do a ton of outlook analyses. So what does this all mean for the global growth outlook?
Sure. Well, the lightening in moods among consumers globally really does bode well for spending throughout the remainder of this year. And that's as economies continue to emerge from the pandemic-induced economic downturn that we saw last year and work towards arresting the spread of the coronavirus. As consumption is a significant contributor to growth among many mature economies, consumer behaviors at the start of the year, in anticipation of greater freedoms later this year, support our revised expectation, our upwardly revised expectation of 5.2% real growth for the global economy in 2021.
Well, it sounds like, there is lots of positive developments ahead of us. And so in the first quarter of the year, what did households spend on?
Sure. Consumers engaged in more discretionary purchases of new technology products, also out-of-home entertainment, new clothing, and vacations at the start of the year. Spending on home improvements and decorating did dip a little bit, and that's potentially signaling a peak in the focus upon housing itself and possibly a greater focus upon returning to engaging in in-person activities outside of the home. Indeed, improved intentions to purchase new clothing and hospitality services suggested anticipation of fewer mobility restrictions and greater vaccine availability. Indeed, there was an article in the news today talking about how people are looking to run out and buy new clothes, certainly as they're going out to engage in more in-person services.
Yeah, makes great sense, right, as we come out of our homes. And was there anything that consumers were concerned about?
Yeah, there were a few things. Number one was health. Number two, economic concerns. Both of those still loom pretty large at the start of the year. And job security was also a concern. Indeed, if we fast forward to now, only 8% of the global population has been vaccinated, despite strong gains in the UK and in the US. So that means the pandemic isn't quite over. Most consumers continue to believe that their economies were still in recession, although the intensity lessened somewhat earlier this year. There was also very little improvement in views on whether consumers believe their economies would be out of recession by the beginning of next year. So that, we think, potentially supported some of the strong desires to use spare cash for savings and investing in financial assets.
Interesting. So can you tell us a little bit more about the saving behavior?
Sure. In 2021 and the first quarter, consumers globally ramped up savings, investing in shares of stocks and mutual funds, and also contributing to retirement funds. And that's after there was a pullback in those categories late last year. Indeed, the share of consumers paying off debts, credit cards, and loans actually dipped slightly, while those citing no spare cash actually decreased. And we think that fiscal stimulus and also improving job markets likely contributed to the improvements we saw in the uses of discretionary income.
Mm-hmm. And I know, our survey has so much detail about so many countries and regions. So let's look a little bit more about these regional details. What did you notice there?
We noticed that consumer confidence continued to improve in 10 of 14 Asia Pacific markets, excluding China. So that's around 71% of those markets. And that's comparing the first quarter of this year to the last quarter of 2020. The 2020 Q4 survey did not include China. However, if we compare the China figures for the first quarter of this year to the second quarter of last year, then we saw a pretty big jump from 97, which would be considered negative sentiment, all the way to 121, which is a very positive sentiment. So that's a really dramatic improvement. Indeed, Asia Pacific, after the Gulf states, were the most confident consumers that we saw. Moving on to Latin America, we actually continued to see strength in the early part of 2021. And that was after a pretty big bounce in sentiment in the latter months of 2020. The region's confidence gauge actually flipped from negative to nearly positive territory, and every economy we covered by the survey, reported sizable gains in confidence. Greater optimism about personal finances drove that recovery. Looking at Europe, sentiment was less pessimistic in the first quarter of 2021, with nearly all economies citing some improvement in consumer confidence. And this is despite the fact that there were second and third rounds of COVID-19 cases. There were renewed lockdowns, and also there was a troubled vaccination campaign, especially in the region away from the UK. And then looking at the UK itself, we did see the finalization of Brexit. So pretty good news despite all of the negative things that were going on in the background. Looking at Africa and the Middle East, we noticed that consumer confidence overall dipped slightly in the first quarter. But when you look at the detail, you can see that countries, economies in the Gulf states that actually had greater exposure to non-oil sources of growth were actually a little bit more confident. And so we think that, having exposure to oil prices was potentially a factor in some consumers not being as confident in the region. But when we look at North America, confidence in Canada rose while sentiment in the U.S. dipped in the survey. However, I would caution that at the time of the survey, potentially bad weather and temporary spikes in COVID cases weighed on sentiment in those very early weeks of the first quarter of this year in the U.S. However, we know from our own monthly survey of U.S. consumer confidence that sentiment actually did pick up by the end of the quarter. And even into April, we had very strong sentiment. So I think it would be important for us to take a little bit of a deeper dive in terms of what consumers in the U.S. were doing. So for this, I'm going to actually turn the tables onto you, Denise, and ask you a few questions. So Denise, how has spending by U.S. consumers developed most recently, and what can we expect in the near future?
Yeah, so keep in mind, we collected the data in the Global Consumer Confidence Survey, including the US portion, in February. And at that point in time, we still saw some caution. However, that caution gave way to a surge in spending by the end of the quarter. But what we did see in February was, US consumers showed a little bit less financial security. More people reported that they lacked the necessary funds for discretionary spending. And also, there was a higher share of US consumers that cut back on expenses in order to save. And that was really up a lot compared to the same quarter of the prior year. It was actually 13 percentage points up, which is huge in our survey. And so it also shows how needed the latest stimulus package was. And the only sort of silver lining in discretionary spending was travel. All the other categories were pretty much down. And we also saw actually the same patterns pretty much in peer economies, like, for example, UK or Germany, where people also cut back a lot on spending to save. And, their spending on discretionary categories was down. However, Dana, as you said before, we saw really a positive trend by the end of the first quarter and that both reflected in US retail sales. They were up 13.7% over the same quarter of the prior year. And we just learned that consumer expenditures were also up in March, 4.2% over February. And a lot of that was actually propelled by those stimulus checks that were, just started to be sent in March. And in terms of what we can expect, definitely we expect discretionary spending, especially on services, to rise significantly. This is, as you also mentioned, Dana, there is a very efficient vaccination rollout, especially in the US. Service businesses are opening, and that includes restaurants, travel, beauty salons, all kinds of service business. We also see strong job growth, and the latest round of stimulus checks will also help with that. People have also grown their cash reserves. That also puts them in a really good position to spend on all these service categories, including travel, entertainment as well, wellness and beauty. Regarding traveling, we can probably expect this to be focused mostly on domestic trips. We have also seen this in other conference board research where CEOs and other C-suite executives reported that they expect business travel to be reduced, in the future, because we have now learned to communicate more online for our, business meetings. But we can also expect spending on other categories to rise. As I mentioned, people have grown their cash reserves. Dana, you mentioned the article about apparel. We spent more on apparel and accessories as we, reemerge from our homes. But also categories like wellness and health, we can expect to grow. And so those are probably the biggest trends that we're seeing.
And also about that news article, they noted that more people are buying pants with buttons and zippers than drawstrings.
Oh, very interesting. Good detail.
Yeah, so Denise, we've been hearing a lot from firms about discussing price increases for consumers, and that's due to a variety of things, including supply chain backlogs, rising commodity prices, and also strengthening demand. So what's going on regarding the pricing of consumer goods and services?
Yeah, there is a lot happening in that area, especially pent-up demand. People really want to go out again and enjoy, traveling, hospitality, entertainment. And there is a lot of factors that have actually increased consumer price indices. For example, higher demand, especially for example, for energy. We saw lately there was a 2.6% year over year price increase for gasoline prices, for example. And so all these price increases will affect consumers in the future. We can also expect, because prices for food and energy, all these essential categories have been rising actually at record rates. So we can expect that more of consumers' budget will go toward these essentials, including food and energy. And of course, that will take away some of the spending power on other categories. But again, keep in mind that those people that haven't lost their jobs and suffered financially in the crisis, they actually have built cash reserves. And so those consumers will still be able to spend.
That's really fascinating. And indeed, our own forecasts indicate that there's going to be faster inflation this year for consumers. When we look at the stimulus checks, people received tons of money from the government last year and also this year. And indeed, the household savings rates have surged and the amount of income that people have surged. Does this mean that we're going to see a big leap in spending? How are people, or have they used those stimulus checks? And what do we think is going to happen going forward?
Yeah, that's a really interesting question. So there have been actually surveys and studies about how people have been using this money. And it turns out that people have actually saved a lot of this money and also used it to pay down debt. So between 70 to 75% of that money has been used for savings and for paying down debt, which leaves only 25 to 30% for immediate spending for consumption. Of course, this varies a little bit by income group, but the takeaway is that there is a lot of cash reserves that people have. So that will bode well for spending in the near future. And you might think, people will just spend it, but from a marketing perspective, it's also really important to still sort of incentivize consumers to spend and to speak to their needs through the products and services you offer, also through the messaging. So really knowing what consumers want at this moment in time. For example, they have been socializing less, they have been spending more time at home. So anything around events or entertainment out of the home, enjoying the regained freedom. It can also be, rewarding yourself, doing something good for yourself, like beauty services, health, fitness, those kinds of, anything like products and services that cater to those needs, and messaging around that will really help to get consumers to spend the money that they have been saving. And businesses will also be in a really strong position to increase prices because of this pent-up demand, because also they have had cost increases, as you mentioned earlier, Dana. So, we can expect some price increases, especially for, services like travel, dining, entertainment. Because of the pent-up demand, because of companies' cost increases, they can also really justify and explain that well to consumers.
Well, Denise, it sounds like there's a lot happening in the world of food, groceries, restaurants. What are you seeing? What kind of developments are you seeing in the U.S.?
Yeah, food has become more expensive for sure. Both food consumed at home, meaning like all the grocery prices, but also the food that we consume in restaurants or that we have been ordering in restaurants. So overall, people will be allocating more money to food in general. But one big trend of the pandemic has been that people have been ordering in food way more because restaurants were closed, so we couldn't go in person. And also, some people just wanted to switch up their new routine of cooking so much at home. But in our survey, actually in the Global Consumer Confidence Survey, the US data tell us that this is actually going down a little bit. So people are using this category, takeout meals, to cut back on more. It means they want to save on this category. So we're seeing shifts back to probably people spending more on going out, meaning sitting down at a restaurant rather than having the food delivered to your home or picking it up at the restaurant. And also some people that want to watch their budget, they might be continuing or even cooking more at home to save some money.
Interesting. I know I've definitely been trying to sneak out to restaurants to eat rather than cooking and ordering. So the pandemic has shifted people's attention more towards health and wellness. I know that I've been going to the gym trying to get rid of the pandemic pounds, but what are the trends and what are the opportunities for companies?
Yeah, it's really interesting to see. There have actually been two extremes, I would call them. So some people, and actually, by the way, the two extremes can be in the same person at different points in time. So two extreme behaviors. One is even more focus on health and wellness and self-care, because people have seen how important it is to take care of yourself in a pandemic where a virus can really damage your health a lot to very severe to a very severe extent. And on the other hand, all the stress of the pandemic, the lack of time, and also to indulge a little bit to make the stress feel a little bit better, that has caused behavior that is less healthful. People have maybe indulged in less healthy food, or they have consumed more alcohol, they have slept less, and so forth. They have worked out less. So we see these two extremes, but regardless of where people are on this range of behaviors, there are many opportunities for companies to, first of all, cater to people, or to, whenever people are ready to want to be healthful with products and services. And there is also an opportunity for company to help those people that have maybe not behaved so healthfully to get back on the bandwagon with products and services. So actually, one trend from the pandemic is more snacking, as a replacement of full meals. That has also included weight gain inducing comfort foods in the snack category. And many people now want to lose their corona pounds. There was actually a recent study that more than 40% of Americans report an unintended pandemic weight gain. And believe it or not, the median was 15 pounds. So people are trying to work on that. And that is an opportunity for companies to offer more nutritious snacks. As people now go back to school and to workplaces, now we have this snacking habit and we want to be healthier. So that actually calls for innovation. How do we, replace those full meals with more snack options? And then the other thing that will be changing yet again are our workout habits. You mentioned, Data, you're going back to the gym. So many people in the pandemic have adopted new habits, working out from home, and also using a lot of digital offerings. But now at least a portion of people will feel safe enough to go back to gyms, even although, the fitness, the gym sector remains reduced because of all the shutdowns and, business bankruptcies. But, and some of these, this at-home fitness and digital fitness will remain. But, overall, and then actually another important trend is the sobriety movement. People abstaining from alcohol. There has actually been a lot of innovation in non-alcoholic beverages, and there are even bars that are dedicated, these virgin bars, dedicated to just offering non-alcoholic drinks. So there are lots of opportunities for companies in the health, wellness, and self-care space.
So Denise, let's end on one last question here. There seems to be this huge investing boom. I hear about everybody using Robinhood and people sitting at home trading, and this is not just in the U.S. but in other economies. What's driving this, and what are some of the implications?
Yeah, definitely. Investing has gone more mainstream, and by the way, that has also caused more risk exposure. But the drivers of that is extremely low interest rates, and on the other hand, record stock performances that promise quick gains for investors. And also keep in mind that the barriers to entry this investment space have been really low because there are so many apps. You mentioned Robinhood and others. And so even for smaller investment amounts, also apps are accessible 24/7. And even younger demographics have now used these investment apps. Also, they are very similar to online gaming. That's another category that has been growing so much. So it's almost like gaming, gambling with your own money. But apps certainly have pushed this trend. And so, again, like there is more risk exposure for investors. And that, speaking of opportunities for companies, that's an opportunity to offer services that help people to make investment decisions. And also for those people that don't want to take the risk, to offer alternatives to stock investments for those more risk-averse people.
Well, Denise, this has all been extremely fascinating. Thank you so much for your insights. And I also had a great time discussing our insights from our global consumer confidence measure. So for our folks listening, this has been Indications from the Conference Board. If you enjoyed this podcast, you may listen to additional The Conference Board offerings by going to www.conference-board.org/podcast, or find us wherever you listen to podcasts. Thanks again for listening.
This has been Indications from the Conference Board.